Good afternoon. I want to welcome everyone to the Osisko Mining webinar broadcast. I'm David Mandy, president of O&M Partners. Many of you are here through the 6-Minute CEO campaign, which is reassuring that active, which is actually still active. We're really pleased to have so many new investors on the line, which is a relief. We're really lucky to have CEO John Brzezinski here to enlighten us about Osisko Mining's high-grade Windfall gold project, which continues to find more high-grade ounces and drive down cost per ounce. Just a little background on John. John was one of the original founders of the old Osisko Mining Company just over 20 years ago. They put the Canadian Malartic project into production and brought good fortune and prosperity into the local community. The Canadian Malartic mine was sold to two major mining companies, Yamana and Nico Eagle, in 2014, making shareholders very happy and creating a lot of remarkable loyalty for Osisko Mining. So on that note, I'm going to turn the call right over to John.
Thank you, David, and good afternoon, everybody. Welcome to our presentation. I am going to be making some forward-looking statements, so if you want to take a minute, go to our website and review the cautionary statements, please do so. Windfall is a project we've been working on for the last 8 years. We're basically in the last part of the de-risking of this project. If you look at mining, holistically, it's all a de-risking operation from the start. When you're looking for something, it's 100% risk because you might not find it up until the point where you've built the mine, you're in production, you're producing cash flow, and you've totally de-risked it. We're in the final stages. We're just waiting for our environmental permits, which we expect to receive by the end of this year or early next year. Then we'll get our construction release. It'll take probably about 18 months to build the mine, and we'll be pouring gold bars sometime in 2026. About a year ago, we announced a partnership with one of the world's foremost and largest gold producing companies, Goldfields of South Africa. Goldfields came in on a deal valued at $1.2 billion. They pick up half of the ongoing expenses, half of the CapEx build, and they put $600 million, a little more than $600 million into our bank account. So as a corporation, we own half of the deposit through the joint venture. We are fully funded all the way through to production, which is rare in the business these days. A lot of companies are still seeking capital, but we're in that final part of de-risking and we're getting ready to go into cash flow. We expect our share of that cash flow starting in 2026 and our first full year of production 2027 to be somewhere between about 150 and 200,000 ounces. And I'll tell you the story as we go forward. Windfall is world-class both in scale and in grade. Our current official resource is about 7.5 million ounces all in. The average grade of the reserve that we've calculated done our feasibility on and calculated all of our costing on is about 4.1 million ounces, averaging 11.4 grams. This makes Windfall one of the very highest grade near-term development projects globally. It is also the largest high-grade underground deposit ever discovered in Quebec, and one of the very few high-grade underground deposits ever found in Canada. We basically, besides building the mine and getting it into production, we've recently completed a power line. Power these days is getting more important. First, having access to power and low-cost power. We're in the province of Quebec, which has low-term rates. We get an industrial rate. We did the power line in conjunction with the First Nations. They built the line. They're charging us a transport fee, but we just hooked that line up in January. So pending our further authorizations, we are also doing exploration property-wide. I'll get into that a little bit later. But the big near-term catalyst, of course, is getting those permits and starting construction of the mine. The deposit, when we acquired it back in 2015, had a small resource. The geology was poorly understood, And we started at the time what we thought was a large drill campaign of 50,000 meters. We eventually grew that campaign to today, where we've completed over 2 million meters of drilling. On this slide, our resource goes from surface down to 1,200 meters. This area contains that 4 million ounce resource that we've and reserve that we've used in the feasibility study. It also hosts about another 3.3 million ounces of indicated or inferred resources, which we're in the process of drilling into indicated. And we believe that by the time we get the mine up and running, we may see that grade increase. We certainly expect to see ounces still accrete in that area. Really, over the past 3 years, what we've done is we've grown the resource by not moving out of that space, because as we've been doing the infill drilling, we continue to find new zones. So I would fully expect in time that global resource of about 7.5 million ounces to grow closer towards 10. Below that first black line at 1,200 meters and down to 2,400 meters, we show some holes on this slide. We have a number more, but we have all indications that the deposit continues strongly to depth. As we go deeper down the deposit, it actually gets wider and higher grade in many places, leading us to believe that over time, we may actually see that resource double in scale. So, what's 7.5 million today may end up being 15 or possibly up to 20 million ounces over time. So we're not talking about a mine with a 10-year mine life as we show in our feasibility, but we truly believe that Windfall is going to be a decades-long mine, like many of the classic and traditional high-grade mines in Canada, if not a generational mine. This is also 1 5 square kilometer area on what we have as our property, 2,400 square kilometers. It's district in scale. And we have reason to believe that there are many more windfalls out there to find. This slide shows the progression of grade from 2018 when we put out our first resource, starting at about 7.9 grams. You can see on the far right where today it's grown to 11.4 grams. Internally, we believe that's probably gone up about a gram. Again, we've done a lot of drilling since that last resource came out based on drilling up to the summer of 2022. I would expect, again, probably to see even further accretion of that grade as we complete the infill drilling on the reserve over the next 18 to 24 months as we get closer to turning the mine on. So we may end up with an initial head grade of somewhere between 12 and call it 13 or more grams per ton, which really puts it in rarefied air in terms of high-grade deposits globally. This slide and on the right-hand side shows you where we sit today with that grade. Windfall is in the top 10. If we continue to see that grade progression, we'll certainly end up in the top 5 or possibly even the top 3 high-grade deposits once we're up in production. On the left, the graph shows in Canada, Windfall is one of only a very few deposits discovered historically, and Canada's had a very long production profile from many, many gold mines. Windfall is one of a very few mines that exceeded 5 million ounces, and certainly it's one of the top high-grade mines ever discovered in the history of gold mining in Canada. This slide shows in the 3 stars, we've collected 3 bulk samples over the past couple of years, each about 5,000 tons. We've recovered approximately 15,000 ounces from those 15,000 tons. And on average, we've had a positive reconciliation as to what we expected for ounces in those individual samples by a little over 50%. What this tells us, and we know this from the way that we treated the resource, we believe even with those high grades I was mentioning and showing you on the previous slides, we anticipate the grade will be a little bit higher. We've employed a triple capping method on our resource calculation. We have our top cut is about 200 grams per ton. We've had a number of samples go much higher grade than that, of course, but they don't reflect in the resources anything more than 200 grams. This one piece of core I'm just going to show you briefly is an example. This is probably the highest grade piece of drill core in the world. Certainly the highest grade I know of. It ran about 90 kilograms per ton. 9 grams per ton is a good grade, so 90 kilograms is a very good grade. All this to say that once we're up and in production, and probably in the first year of production, we'll know, we expect there to be some kind of a positive grade reconciliation versus what we see in the resource. And every gram additional grade that we do see coming into the grade once we start mining at 3,400 tons a day times the number of days per year gives us about 35 to 40,000 additional ounces as to what we expect to see based on the feasibility. The feasibility number was about 300,000 ounces a year. So if we get a couple extra grams, that may be pushing closer to 400,000 ounces per year globally coming from the Windfall mine. This slide shows our current mine design. Effectively, we're going to be mining the deposit as 3 separate zones. And, again, at about 3,400 tons a day. The initial production of for the first 10 years comes from these blue, red, and green zones, all from surface down to about 1,100, 1,200 meters. I mentioned earlier that we'd completed a power line. Last January, we announced that we were starting it, assumed it would take about 12 months. We completed it in January on schedule. So we now have direct hookup to site. We were formerly generating power on diesel. The advent of this power line now brings our power costs down tremendously. It'll probably save us on the construction alone about $26 million, but it ensures cheap power to the mine for the life of the deposits. This mine was built, financed, is owned and operated by the Cree First Nation, our partners in the Windfall district. And as I mentioned, we'll be paying them a transport fee on top of the Hydro-Quebec power rate. And so they participate through the life of the project in the benefits and cash flow from what we're doing at Windfall. This current slide shows our district scale property. In brown, these are our claims, and in green is the recently announced joint venture we did with Bonterra. It was the only significant piece of the belt that we didn't previously control. This was a 70-30 joint venture where we spend $30 million over the next 3 years, plus a $5 million payment, which entitles us to 70% ownership of that ground. Effectively, it gives us about 2,400 square kilometers, 2,500 square kilometers in total of the district, which is larger than the whole Val-d'Or camp you see down on the bottom left. The Timmins camp, which is off to the right of this map, is about the same scale as the Val-d'Or camp, and each of those historic mining camps have produced over 100 million ounces of gold. We've done a lot of scientific work in the camp in terms of looking at the types of rocks associated with the Windfall deposit and age dating the intrusives associated with it. It gives us a strong reason to believe that there should be many more windfalls to find over time as we start doing regional exploration. So back at the beginning, I was talking about what we're doing currently. We're doing the final de-risking of waiting for permits and then constructing and building the mine. Typically not very exciting things for the market. But this year, for the very first time, we've actually started to hit the regional exploration with our partners Goldfields in a very strong way. We've got about 10 rigs out in the field right now, some as well on that Bonterra ground. And really, for the first time in the last 8 years, we're starting to seriously evaluate the possibility of all the other targets on the property and see whether we can find our second Windfall. And stay tuned, because that could generate some excitement as we go through the year. This slide shows the Windfall deposit in the center and some of the near deposit targets that we've put a few holes into over the previous years. Golden Bear, Fox, a number of others have given us indications that there's certainly mineralization nearby. Some of these may turn out to be satellite deposits, or with luck and more drilling, they may turn into other separate deposits. But what we've been focusing on are geological settings that are identical to Windfall, and in structural settings identical to the emplacement of the Windfall deposit. We have a number of targets to drill, and this will be a process that engages us for a couple of years, certainly just doing the near-term deposit targets and on the larger property. Part of that deal that we did with Goldfields last year is very interesting to us financially, because they're obliged to spend the next $75 million of exploration, basically funding the work for both sides of the partnership in the coming 6 to 7 years. This map shows one of the targets of strong interest to us right now. We've got about 3 drills over on what we call the Moss target. This is on the joint venture ground we recently acquired from Bonterra. It's about 5 or 6 kilometers southwest along strike on the same principal structure as the Windfall deposit. And the way we look at this target right now, based on some prior drilling, historic drilling that was done by Bonterra and some of the regional startup drilling that we've conducted, it looks like a very similar geological setting to what we call the links portion of the Windfall deposit, which is the heart of our deposit. It looks like we have a very similar geological situation to what we know exists where the main deposit is on the Windfall side. If I had to bet a nickel, maybe this is an area where we're going to see some joy once we drill some deeper holes in along what we call the bank fault extension on that ground. And hopefully this will give us something to chase down and provide some exploration excitement in terms of potential new discovery results as we move through the summer. At that point, I'm going to turn it, David, over to you and the audience for any questions. But in summary, Windfall is one of the world's largest high-grade near-term development projects. We have a very strong partner in Goldfields International. The company is cashed up. You won't be seeing us doing any financings. We literally don't need any more cash to do the work that we have to do to get the deposit into production. We've actually been using this year and last year quite a lot our NCIB, our normal course issuer bid, buying stock back in times of weak market. Pleased to say that stock's up nicely today with the US Fed announcement that they're looking for 3 cuts as we go through the rest of the year. We are looking at record gold prices right now, so this should work in tandem with what's a near-term world-class gold producer. Over to you, David.
Questions that have come in, and then I'll go down the list.
Great. Our first question is from Andre. While some shareholders were looking for a buyout, others like myself are hoping to maintain ownership right up to production. Is this still your plan going forward?
Yeah, I'm sorry, there's a bit of an echo on the line, and I believe the question was some shareholders were looking for a buyout and is going into production still. Is that correct?
In fact, the guy that's asking the questions in it for the long haul, as he said.
Yeah. It's mining's a long-term proposition. We started this company about 8 years ago. It's taken about 8 years ago to bring the deposit to that time point where we're almost ready to receive permits and building permits. It's our intention to become a producer again, like we were initially. Back to that first slide, and usually I pointed out when giving these presentations, it's not a stock photo. That's the slide of the last production that came under the Osisko banner from the Canadian Malartic mine. We poured the first 1.2 million ounces after we put that mine into production, and that was almost exactly 10 years ago. We're looking forward to being a gold producer again.
Thank you. We have another question from Lincoln Ratham. What are the main risks going forward?
Certainly permitting, construction. I don't think there's a lot of commodity risk. The price of gold, I think, is set to start outperforming. It's been doing very well, even over the last couple of years. It's just the equity markets haven't seemed to follow the gold price. But certainly we're heading into a strong gold price environment. Permits in Quebec for a project of this size in this area usually take about 18 months. We started our permitting process last year about this time. And again, we expect to come out of this process by the end of the year or early next year. Construction always has risks, even though as much as we'd like to think it's a perfect process with little risk involved. When we were building Canadian Malartic, we had a small fire. We had a few things break. They didn't cost us a lot of time. They caused the market a lot of anxiety. But really, I think the remaining risks that we have are very manageable. And things that won't delay us too much and ideally won't cost us much money.
Another question from Lincoln is there any impact on future inflation on costs, and what cost per ounce is forecasted?
Yeah, sure. I think everybody is globally, when I say everybody, I'm talking about mining companies and development projects, have seen cost increases due to inflation. Osisko Mining is no different. When we put out our feasibility, we were forecasting our capital expenditure to build the mine at 789 million Canadian. Certainly costs have gone up and labor costs have gone up. We did manage to secure most of our milling equipment. That's all sitting in dry storage in Quebec, the mill shells and motors and things, so that we do have some forms of protection from inflation in that sense. But like anybody else, we're probably looking at about an 8 or 10% increase in the capital cost to build the mine. But normally, this would affect how we're going to look at the overall cost. But we've also seen, in tandem with that, increase in grade through more infill drilling, and hopefully, again, we're going to see that continue as we complete the reserve drilling. So with the higher denominator, ideally our AISC, which was forecast previously at about 750, 775 US per ounce, should tread water. So we're looking at a project that'll have a margin of at least $1,000, if not better, per ounce.
Thank you. If you don't mind, could you just move your screen down a little bit so we can see your head better? That'd be great.
Down or up, down?
There we go.
Yeah, sorry.
Yeah.
I think the computer got moved around in terms of...
No problem. Your next question is,
up.
how many active drill rigs and meters of exploration drilling have been completed on Phoenix properties, Moss, and other early regional targets near Barrie and Gladiator? When do you expect initial drilling results to be published?
I wouldn't expect to see initial results until probably the summer. We literally just started in January. Right now we have about 10 rigs out in the field. We've got about 10 rigs underground. I like to joke we don't have many rigs out in the field these days. We've previously had up to 35 working on Windfall alone. We are continuing the infill deposit drilling itself, but we right now have about 10 rigs out in the field. The bulk of them are out on regional targets, and I believe 3 or 4 are on the joint venture ground with Montero.
Great. I have another question from Michael. What is the project CapEx estimate now and pre-production capital?
Yeah, I just mentioned in the feasibility, the project CapEx was 789 Canadian. And the prior question was about inflation. So we're looking at about an 8 or 10% increase in that cost. And that's a guesstimate right now. But I wouldn't expect it to exceed that by the time that we get to the actual construction itself. In terms of ongoing costs, we expect to spend about $250 million between now and that point of construction.
Thank you. Now I'll turn it over to David.
These costs, of course, being split between the partnership. That's the beauty of a joint venture partnership. That's the beauty of a joint venture.
Really great, for sure. Any other questions from the group? I know we have Bill Musser on the line. Bill, do you have any questions today? Comments? Okay. Let's turn to Howie Flinker. Bill, once again, can you hear me? Just repeat it.
Have you thought about spinning off a royalty to your shareholders on this property?
The question is, have we thought about spinning off a royalty to our shareholders? And our shareholders, you're probably referring to the sort of move done by Great Bear.
Right.
Christian did that with Great Bear.
Right.
The project already has between 1% to 3% royalty. When we created the company and before we even put our first foot on the ground or drilled our first hole, it was part of the creation of that we attributed a 1% NSR royalty to Osisko Gold Royalties. In the meantime, they went and acquired, they did on other existing royalties that were in the camp. This was a camp that had a number of companies over 1 or 2 decades working there. So they corralled all those up. So it already has a 1% to 3% royalty depending where it is. We're not planning on issuing any other royalties on the project, no. Any other project.
Thank you, Bill.
Yeah.
We're going to go next to Alon. Do you have any questions? Probably mispronouncing it. Trevor? Let's try Alan Graham. Alan, do you have any questions? Okay. Let's go to Howie Flinker. Any questions, Howie, today? I know you're pretty well up to speed, but figured I'd ask. A little bit of a delay. Howie's muted. Let's go to Jeff Masseri. You're unmuted, Jeff. Do you have a question or comment?
Yeah, I
Interested
do
in what
have
you
a
have to
question.
say.
Can you hear me?
I can, yes.
Yeah,
Okay, great.
just fine. Yep.
I arrived a little bit late, so could you just go over the timeline to production that you are expecting as per the feasibility study?
Yeah, sure. It'll be 2026. We're really in the only part of this whole process from starting to look for a mine to opening up a producing mine. This is the only part that we don't control. The permitting is in the hands of the regulators. We filed our application for our environmental permits last year in March. Typically in Quebec, a project of our scale in this area, the ones that we've looked at have taken about 18 months. So by that metric, we'd be looking at the end of this year or early next year to receive those permits. It usually takes a couple of months between that and the issuance of a construction release, which allows you to start constructing. And we're forecasting construction at being between 12 and 18 months, depending on what month of the year that we start in. Obviously, if you start in the cold weather months, it takes longer. If you get to start in the warm weather months, it takes a little less time.
Well, we at Greystone don't call mining mining. We at Greystone call it permitting.
Yeah, well, it's the beautiful thing about Quebec is that it's relatively reliable.
It is.
With a plus or minus that's predictable. When we built Canadian Malartic, the process was 11 months from bumper to bumper to go through the public hearings and get our permits.
I remember it well, and even before you moved the village.
Yes, yeah, well, that was a whole separate project on top of that.
Right.
And for any of the listeners out there who don't know what we're referring to, as part of building the Canadian Malartic mine, which we opened back in 2011, we had to move a third of the town of Malartic. It cost us about $170 million as part of the project. Yeah.
Well, that's what I said about prosperity, because it really was in their favor as well, correct? I mean, it was really an upgrade as a...
Yeah. Well, the town was economically quite depressed when we started the project. Before we drilled our first hole in 2005, I think at that point the unemployment level in the town was about 43% unemployed.
We have Mike next. Sure.
Hello?
Okay. Yeah, hi, Michael.
Yeah, just back onto the CapEx. I thought after the joint venture announcement that you indicated that you might be able to reduce the CapEx closer to 700 million.
There's some cost savings that we looked at, reduce some of the numbers certainly, but again, one of the things about a joint venture partner is at that point you start discussing what modifications and changes you want to make. In our feasibility, we were looking at 789 million. It's a process that is still ongoing in terms of minor modifications and some of the changes and things, and then of course we've got inflation. So while we were looking at one point of some cost savings with different modifications and inflation, it's looking like it'll be, again, about 8 to 10% of that 789 number. And that's not a hard official number. That's not a guess as of today, because it falls in line with what it falls in line.
Okay, thanks. And also on the pre-production capital, just can you explain why that's not in the feasibility study, or is that typically how the studies are conducted?
It's part of the ongoing work, and actually a lot of it qualifies as exploration. You know, a lot of companies don't do underground exploration at the same time as they do surface exploration to define a deposit. When we acquired the Windfall project, it already had a pre-existing exploration ramp that went down about 1.2 kilometers. We took the decision early on because of the nature of the deposit. We knew that market-wise, people weren't confident about the continuity. It was a very high-grade deposit, so we knew there would be questions about the continuity of grade. So we took the decision to extend that ramp to a point today where we have about 14 kilometers of underground ramp. We have access to the deposit from surface to over 600 meters vertical. And that's part of what the ongoing capital expenditure is about. We're extending the ramp now to do a fourth bulk sample up near the fault. The bulk sample work and underground exploration ramp work has allowed us really to be certain about how the deposit sits geologically. It's allowed us to be certain about the grades. It's allowed us to take the prior bulk samples to confirm what we're seeing in drilling, and it's given us the access underground to further drill this deposit into measured indicated status. It's really a luxury to have that ramp because it makes it so absolutely certain about what we're going to see once we start mining. It also probably ends up saving a couple of years once the mill is built, because a lot of the underground access is already existent.
Thank you, Michael. Trevor, do you have any questions?
Yes,
No,
I have
we'll
a
turn to,
question from Doug
go ahead.
Loud. Are you looking at uplisting to the QX?
Typically, as an explorer in Canada, a lot of the companies like to sit on the Canadian exchanges. A typical path would be you start as a Vancouver junior because it's a little easier and faster and cheaper in terms of the regulations you have to, the filings and things you have to do. Eventually you upgrade to the Toronto exchange, which is the bigger company exchange. What we have done historically too, and we were at the point of starting to look at the NYSE listing with the original Osisko when we got into the hostile battle. As a result of that hostile battle, we ended up as a royalty company, but one of the very, very first things we did was we listed on the NYSE. So the intent would be once we're up and in production, we move to a US exchange.
Thank you. Another question. With the current share price of just under $3, how undervalued do you believe you are compared to your current assets, forgetting future potential for now?
Massively. Yeah. I mean, every CEO is supposed to say that. But but one of the things about the market in the past 5 or 6 or 7 years there has been a significant disconnect between asset value and equity value. Despite all-time gold highs, we haven't seen that value come into the equity prices, at least not the way that I've been familiar with over my career. I think we're on the verge of seeing that change. Certainly in the last number of significant conferences and meetings with senior shareholders, we're seeing a lot more generalists start to show up and take an interest in gold. It is cyclical in terms of the investment cycle in and out of gold or any metal. But if you look at our half of production that we anticipate getting based on the feasibility, it'd be a little over 150,000 ounces a year. If we're right about the grade increases by the time we start production, it might be as high as 200,000 ounces a year or even higher for our share of the production. Typically, a producing company would see about a 15 or 20 times multiple on that production in terms of where their market cap sits, on that cash flow. So you can do the math in terms of where we think we're going to get to once we're up and in production. And really, that re-rate starts to happen the closer and closer you get to actually turning the mill on and seeing the gold bars come out the other side. So we're basically on a 2.5-year de-risking and value accretion journey here.
Thank you.
John, I have a question.
Go ahead,
Trevor,
David.
we're going to just ask a quick. So given the lack of investment demand, it's just totally changed from the last cycle.
Mhm.
Wouldn't it make sense to have a US listing a little bit earlier, just to help bring in more buying?
Perhaps, but I mean, for the most part, if you're looking at a significant exchange in the US, you have to have a certain market cap size, a certain liquidity size, et cetera, et cetera. And that it's an awful lot more expensive to have the US listing with the Sarbanes-Oxley and everything else. So it's, I think, corporately something that we're more comfortable doing once we know that we're into cash flow and getting to be that larger company. We do trade on pink sheets, certainly, like a lot of companies, but with the real listing will come once we're in production.
Great.
Got it.
Is anyone opposing your permits?
No, we have a very strong partnership with our hosts, the Cree First Nation. The municipality is named Waswanipi. We did a partnership with the town, with Waswanipi, to build the power line. They financed it and built the line that feeds power to our mill. We're on their traditional grounds, and we employ about 30%. I think right now 30% of our staff is from the First Nations in the region. They're very supportive. The Cree First Nation in Quebec settled their land claims with the government, probably over 30 years ago. They own a number of enterprises, airlines, transport companies, service industries and things. So they have an economic interest in the development of certain areas of their territory, their traditional territory. And Windfall is one of those areas where they wish to see new industry.
Great. I have a question from Douglas. In the past, you have benefited from Quebec exploration expenses, flow-throughs. With the GFI JV, do you see yourself using this option? Or like you said, no more financings?
We would continue to look at flow-through as a way to finance exploration work. At least historically, it's a cheaper way and a less dilutive way to raise and use capital to do drilling. Right now, I don't foresee any more 2 million meter drill programs. That could change quickly if we have another discovery. So ask me then. But at the current time, no, we don't need any additional money right now. We actually had some flow-through money left over from prior to doing the deal with the GFI. And as I mentioned earlier, and as you just pointed out, for the next 6 or 7 years, GFI will be funding to the tune of about $10 or $15 million the exploration program to meet their $75 million commitment.
I have one more question in the Q&A chat. From Robert. So the grades are getting better. Power line done. Environment permits will be done this year. My question, why aren't these big players trying to buy Windfall?
Well, I mean, we never know what these guys are doing. Certainly with Canadian Malartic, what happened was we got a phone call very early January morning, and that was from Goldcorp saying that, by the way, we just put out a press release, we're going hostile on your company. We were literally at the tail end of the ramp up of the Canadian Malartic mine. Canadian Malartic is the world's 9th largest gold producer. It's still the largest gold producer in Canada. And as a result of that fight, we ended up losing the mine. The shareholders, when we started the company, it was about $1 million market cap company. When we sold it to Agnico and Yamana, it was $4.3 billion. So yeah, that could always happen, but it's not a path that we're looking to pop up unexpectedly on a cold morning. There are certainly not a lot of assets out there in the world right now for existing producers to grow. It's a result of not many people spending enough money over the past 20 or 30 years to find new deposits. Most of the M&A has been companies buying other companies. So certainly the larger producers out there, in terms of looking for growth to replace their depleting reserves and resources, are going to have to resort to buying things. But right now, our path is to go and become a producer.
So the big gold producers are actually producing more than they're finding now, right, John? Most of them?
Well, it's a function of how much you spend on exploration. By my math, it costs about $100 million to find 1 million ounces these days. And not many people are interested by just 1 million ounces. The larger companies want to see 5 or 6 or 10. It's become a more and more expensive business cost-wise. Permitting times are taking longer, and now even more recently, we're starting to see issues regarding the access to hydroelectricity. So it's becoming a tougher business, and harder to raise the capital in a market where there aren't a lot of generalist investors yet. Ideally, that changes as the price of gold goes up, and if it continues this way, it can only lead to a higher gold price because you're seeing a depletion of availability of gold, and whenever you can't get something, it goes up in value, right?
There you go. Any other questions from you, Trevor? I can ask a few
Actually, we
people.
had one more question just come in from Michael. In terms of liquidity position, capital spending, and debt repayment due. Anything on that?
We don't really have any debt. We have one convertible debenture that was done as part of a deal we were contemplating with an Australian mining company a couple of years ago. That's a $154 million convertible debenture. It has a 4.75% coupon, and it expires in about a year and a half. We looked at basically canceling that out once we did the deal with Goldfields, but our overnight rate on cash in the bank right now is about 6%. So we're actually making money on it right now. That piece of paper will retire at the end of 2025, and otherwise we don't have any debt. That was one of the reasons we chose to go the path of a joint venture partnership. It removed all the financial needs that we had in terms of ongoing work and building the mine.
Thank you. David, that concludes all the questions in the Q&A. Got
it. So what's it like working with Goldfields?
They're fantastic partners. Goldfields is about 127, 128-year-old mining company with a long history of underground high-grade mining around the world. They've been a fantastic partner, and if anything, they're more enthusiastic about the deposit than we are, and we're pretty darn enthusiastic about the deposit. So it's a very, very good partnership.
Thought so. Let's go to some of my friends here. Murray Vanderveld. Murray, do you have any questions? I always like Murray's questions if he has one. You're so muted, Murray.
I'm sorry, can't talk right now.
Okay. On the call. Paul O'Leary. Paul, any questions?
I'm on an exercise bike.
Okay. The virtual world we're in. Isn't that something? Okay. All right, if there aren't any questions, we'll proceed to close. We usually hear from Marshall Farrell. I don't know if Marshall has any questions. Okay, I think it's been a great Q&A. I appreciate everybody's participation today. And I'm going to turn the call over to John for closing remarks.
Well, thank you very much, David, and thank you everybody for taking the time today. Osisko mining really is a pretty simple story. After a lot of hard work that wasn't simple, but we've uncovered a world-class scale, world-class grade deposit. It's a coveted asset. We have a great partner in Goldfields International, long experienced miners. We have all the capital we need to do the ongoing work and build the mine, and we're coming into the perfect storm in terms of what's happening with the gold price. We anticipate being in production sometime in 2026, depending on when we receive the permits. But this will start out with a cash flow profile and an ounce per year production profile, very similar to Canadian Malartic when we started that mine. We started in the sort of 400,000 ounce a year range. So again, it's been a lot of work to get to this stage, but we expect to see a very strong re-rate in terms of the value of the company by the time we get to that production.
Thanks very much, John, for presenting today, and I want to thank everyone for your attendance. It's been a great pleasure, and we'll follow up after the call for feedback. Wish you all the best. Pleasant afternoon.
Thanks, everybody.